that's at least 100 to 200 million dollar business, right? All right, even if you use a 10 times multiple, right? We've lost the foundation of compounding when it comes to investing, and everyone's so obsessed with the 100x return.
Welcome to part 2 of this podcast with Kwehnui Tawah. Our discussion has been so far incredible. Let's pick up from where we left.
Hence why Unilever bought Shea Moisture for over $1 billion, right?
Yeah.
If you look recently, P&G bought Miel Organics for $700 million, right? I think that transaction was 2 years ago, 2.5 years ago, right? Okay. So the point I'm making is that the world is shifting away from what I call a one-size-shoe-fits-all, where all I have to do is apply different faces on my marketing and tell the customer this product works for everyone. To now, companies are realizing that I need to create products for different people groups that are truly tested and proven to work for them. And so that's a global shift that's happening. However, the shelves of most beauty retailers in Kenya do not really reflect that. And why is that? It's a function of colonialism, right? Where we've been told for a long time, if it's UK, if it's France, if it's US, it must be good.
Yeah.
So our benchmark for quality is where the product is from, not the performance of the product.
I see.
And so what we are shifting is we're shifting the customer away from, just because this is a Kenyan product doesn't mean it's subpar to the UK counterpart. In fact, in many cases, it's superior because it's actually formulated for you.
Yes. Okay.
And so that deeper understanding of at the ingredient level of product performance enables us to provide a scientific-based advice to our clients and then introduce products that actually work better for our clients, right? And so fundamentally for us, that's where we make money, right? We make money on the product side. And so our model today is leveraging an e-commerce model to be able to deliver this. I'd say our e-commerce structure resembles more like Amazon in its early days, where we are a retailer, right? We are taking on, for the most part, retail risk on a lot of these brands. In some cases, we start them off on consignment, so we can build an understanding of the brand, the movement of the brand, the products, SKUs, before we take them on retail. But fundamentally, we believe that a retail model is critical for two things. One, it helps you eliminate quality issues. If you look at Jumia and the problem with Jumia story, right? When they transitioned from retail to marketplace, quality went down.
Yeah.
Right. Number one. Number two, much higher margin business, right? If you take most of the marketplaces who operate in my space, right, they make anywhere from 15 to the highest, which is Jumia. And it took Jumia years to get here at 25%, right? We operate at 30% plus gross margins, right? But that's a function of being a retailer and taking that retail risk, right? And so that's where I am today in my journey. And so I run Baki, and I call that my day job. And then investing is still my hobby that I do, but my portfolio looks a little different, right? As I said, public market, but now a private market stance focused on early stage African companies.
Wonderful story. Now, I'm curious, though, like, do you want to walk us through, like, what was a typical day like for you when you're working at Goldman Sachs? I'm just curious because, I do trading but in the US. So what was a typical day like, managing a portfolio of $2 billion? So what would you do every day in a typical day?
A lot of my day was spent doing analyst work, right?
Okay.
So you wake up by 4:30, hit the gym by 5, finish the gym by 6, hit the desk by 6:30, prepare for a morning call. We used to always do a morning call with all the other traders / portfolio managers, desk analysts, our salespeople, because we had salespeople who covered predominantly hedge funds who would invest alongside us. And we would talk about like, what are our top picks for the day, right? What are we focused on? What's going on in our sectors, right? And we were broken down by sector. And so for me, that first part of the morning, our call usually started by 7:15. So that first 45 minutes of my day was just spent digesting any news that I may have missed from the night before,
Mhm.
digesting any earnings report from companies in my sectors, and then being able to provide bite-sized content
Mhm.
to our salespeople and the rest of the team, right? Because especially if you cover energy, energy impacts a bunch of other sectors, right? And so it's important to be able to kind of give people a barometer for like what's going on in your sector. And so that was the morning meeting. And then post that morning meeting, I would do a deeper dive on any news, especially company specific news
Yes.
or earnings. And so my morning was usually covered with earnings. Then my afternoon was usually spent talking to clients, right? Speaking to hedge fund managers, speaking to analysts at hedge funds, at CLOs, um, and sharing my views, right? And then also, like I said earlier, Wall Street's a game of information,
Yes.
right? So you got to be clever about how do you give information, but how do you also receive information? And that was something I had to learn, right? Because I think very early on I would just give a lot of information and I
Uh,
wouldn't always do a good job getting information back,
uh,
right? But one of the guys who mentored me started teaching me that, in every relationship there's a give and take, right? And so you got to learn how to
Transactional.
take. Exactly. Because that's what makes you more valuable to the next hedge fund manager,
Yes.
right? Because if I'm able to get some insights, right?
Yes.
Because someone is a Canadian oil sands expert and can tell me, really specific information about, hey, the cost of production per barrel with the new technology that's coming out, right? You imagine this was like fracking, right? And there was technological improvements, kind of like what we're seeing with AI, right?
Yes.
Every few months there was new technological breakthroughs.
Okay.
And so what was previously the cost of production
Yeah.
was not always going to be the case in 6 months' time. And
Yes.
so your break-even point for certain companies was constantly adjusting.
Mm.
And so especially when oil took a nosedive 2016,
Yes.
that analysis and that information was especially critical because you would see people sell companies based on historical break evens where they thought this company needs at least $42 per barrel
Yeah.
oil price in order to break even.
Mhm.
But because of the advancements in technology, the company was able to bring their cost structure down to 35. So
Yes.
even with oil at 39, these guys were making money.
Yeah.
All right. But if you didn't have that insight, you
Yeah.
would end up either selling or shorting companies that
Mm.
you actually shouldn't have shorted,
Yes.
right? So that was the value of being able to basically, I call it trade information. So a
Yeah.
lot of my day was spent trading information,
Wow.
right? And I probably in a day would execute probably less than 10 trades. But I think
Mm.
it was just a function of like
Yeah.
what I was doing, right? Because we were predominantly invested in distressed assets,
Yes.
right? Distressed assets tend to be quite illiquid. Our average trading size was much larger
Right
than
on.
say what people do in equities, right? So you're per trade, you're doing about maybe $5-10 million per trade,
Wow.
right? So much larger trading volume. Like I
Yeah.
remember once there was a managing director in our desk who did $1 billion trade.
Wow. And hopefully it turned out positive.
Yeah, we made money. We made money. We made money.
Yeah.
I think we made a 15% IRR in like 3 months. It was
Wow.
on
Yeah.
$1 billion.
Yeah, I think that would have been a high winning probability because one thing that I'm learning, trading is that, like you said, I don't have to trade every day. Like today, I woke up, I was monitoring a particular, by the way, this is not investment advice. It's just me and Kenu, discussing our personal views and experiences. And I just didn't take any trades, right? But sometimes when I do take trades, I have to, like be convinced based on my data, fundamental and technical analysis that I believe this is a low risk trade. And then if I do so, I can do so aggressively and of course within some risk limits. So I'm just learning to be patient. Not every
Yeah,
day I trade, but it's
yeah,
not always easy.
yeah,
You
yeah,
know?
yeah, yeah. No,
Yeah.
for sure. I agree with that.
And do you have like any experience of like your wasted day that you lost money? Do you care to share that? Like how much did
Oh man. Oh man.
I will start
Yeah, yeah, yeah.
myself. I remember I made a loss of 24,000 US dollars. That was on a Tesla core options, right?
Oh wow.
24,000, right? Fortunately, I'd made some more money. Then I just, sold. and covered the position. But from that day,
Mm,
I learned that, when you're doing options, trading options, you really have to be careful and always have a stop loss, you know?
yes, 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 yes. So I think for me, it comes back to um fundamentals, right? We had a position in an offshore drilling company.
Yeah.
What was interesting about this company relative to the rest of offshore drilling companies was
Yeah.
that they had a massive onshore drilling business. But
Mm,
because offshore drilling, because of the age of fracking, was so popular,
yeah.
they sold themselves predominantly as an offshore drilling company. That's how they marketed themselves, right? Because that was the growth engine of the business.
Mhm.
And I remember I looked at the business and I realized these guys owned assets in some of the lowest cost production areas, like the Middle East.
Yeah.
I think they had some assets in like North Africa. Um, and then most of their offshore assets were a bit in the Nordic, around Norway, and then a bit off the coast of the US, right? And most of these were more exploratory assets. But what
Yeah.
was interesting was when you looked at the profitability of the business,
Yeah.
the share of profits that was coming from onshore
Yeah.
was more than half,
Mm.
right? But because everyone was so obsessed with the offshore, which was the growth side of the business, no one paid attention to the onshore side, right? So the valuation of the business was very offshore driven,
Yes.
right? Kind of like what we saw in tech, right? So what happened? At the time, oil was trading at $100 a barrel.
Yes.
Every offshore project you were printing money, right? Because on average, your cost of production in offshore projects is in the 40s,
Yes.
right? What when you look at onshore in the regions where these guys were active, their cost of production was between $18 to $22.
Mm.
So imagine oil goes from $100 to $29 a barrel, right? So I'm holding this position and I'm down 50 million. I'm
US.
down $50 in this position because the market was thinking these guys, for them to make money, oil needed to be above 40.
To even break even.
And so I remember sitting down with my boss at the time, and we went through my analysis, we went through my view, and I was telling him, I'm like, these guys have a massive onshore business. And
Yes.
he was like, let me call another analyst. So he called another energy analyst at a hedge fund he knew,
Yes.
walked him through. And the guy was like, that sounds like a good buy. I'd want to buy.
Yeah.
And so he came back and he told me, he's like, look, what's your view? Do you think that the onshore business will continue to perform even at these levels, right? And do you think that we should continue to buy more, or do you think we should sell? And I told him, look, fundamentally, I think this company's sound,
Yes.
right? I just think that the valuation had grown because of the offshore business and the hype that was going into offshore. But if you look at the core of this business where the engine was, onshore was still the engine. And
Similar
so
to
even
what's
if sold
happening with Nvidia now. The same story.
exactly.
Yes.
So my view was even if you sold the offshore business and all you had was the onshore business, you would still make money in this investment.
Mm-hmm.
And then he told me, look, even if you're down 50,
Yeah.
if your philosophy and your metrics are sound, hold your position.
Yes.
So I held. We
Yeah.
ended up making money in the position. I wouldn't say how much exactly,
Yeah.
but we ended up making a good amount of money in the position,
That was
right? But
50 million, and then you went on to
yes,
break even and make some profit.
yes, 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 yes.
Yeah.
And so the lesson I took from that comes back to what I said earlier,
Yes.
right? Around you got to be able to digest new information, but you have to have a framework that is based on core principles
Yes.
that enables you to, even when the market may be telling you that you're wrong, look at your framework and hold on to your convictions,
Yes.
right? The market was looking at this business as an offshore business,
Yes.
whereas I had information that enabled me to look at it as an onshore business
Yes.
and then realize that there was value that people weren't paying attention to
Yeah.
because people were only valuing the onshore business.
That's very interesting. And I know you have invested in Meta now, Facebook, formerly Facebook, and Twilio and all these other Airbnb, and I'm sure
Mhm.
you've made money out of that. Do you have any
Yes.
particular investment thesis that you you have, like when you are looking, of course, you've talked about, information and understanding the business. Like if you were to summarize it in an easy to understand manner,
Mm.
what would that be?
Yeah, I think my investment philosophy, and I would say this, and you caveated this earlier. I think it's important that everyone develop a philosophy that matches their personality,
Yes.
right? I'm naturally a big picture thinker,
Mm.
right? I love
Macroeconomics
having
kind
big
of
debates.
Dear viewer, thank you so much for tuning in to this podcast. I really appreciate you tuning in. But did you know that only 10% of all the people who watch this podcast are subscribed? So if you're one of those people who are not subscribed, I highly encourage you to subscribe so that you can get notification when I post new podcast and other content on personal finance and investing. In return, I promise you one thing. I will bring in guests from different parts of the world who have different experiences in personal finance, investing, and from different career walks. Now, the goal is to inspire you and to have these people in conversation with me share their experiences so that we can both learn from each other. If you have any questions, you can also put them on the comments so that we can respond to your comments. I hope you enjoy this episode. Have a wonderful time and may the markets be with you.
Yeah, exactly. Like I love having big debates about, like I was talking to my wife earlier
Yeah.
about my view about the Kenyan economy and what are the changes if I was in government in Kenya I would make, which effectively would lower the cost of living and effectively guarantee this administration their next election, right? And that's big picture thinking and predicting, right? It's looking at where is the tailwinds going and how do you kind of align yourself, right, to the tailwinds. And I think that's why I naturally gravitate to venture and private equity, because you have to be able to be that sort of big picture thinker and then allocate capital behind sort of a big tailwind. And then of course you got to be disciplined enough to choose the winners, right, within the space such that you capture the most value. But I think fundamentally for me, even with public market investing, I'm still very much a big picture thinker, right? In terms of like looking and saying, what are the structural changes that are happening across the economy? And where do I think value is being created? Right. So you take an organization like Meta. I liked Meta for two reasons, right? I felt that for the one part, Meta relative to Google
Yes.
had a much better understanding of its users and could do much better targeted advertising so that they could eat Google's lunch,
Yes.
right? If you think about the quality of information we offer to Meta for free
Yes.
versus what you offer Google, right? Meta has a more complete picture on who's Isaac.
Yes.
Meta has a more complete picture on who's Khwenhui,
Yes.
right?
Yeah.
And if you think about one of the biggest challenges of like any marketer,
Yeah.
right? It's all about one, understanding your user, but two, being able to predict your user's taste.
Yes.
And that is ability to build the social graph, which is one of the things they've invented. Incredible, right? So that was my thesis, was it was looking at the fact that massive tailwinds in digital advertising, just because it's lower cost than physical advertising, right? Or even TV and all those other channels, right? And so as a result, SMEs and the rest could, for the first time in a very affordable way, get into advertising. Massive tailwind, right? Now it's like, okay, who are going to be the winners? Of course, Google is already a clear dominant player in the space.
Yeah.
But the challenge that Google had was Google's information was limited into what you put into Google search, right? And like beyond the things that like maybe I'm just thinking back to like my childhood, right? When I was in high school, right? In the early 2000s, like other than like questions that I really wanted to know information. I wasn't, unlike today where everybody begins almost their internet journey on Google, right? And it's a function of Chrome, right? And browsers. Back then, what was I using? I was using Internet Explorer. Most of the time, I knew the website I wanted to go to. I'd type in directly into the URL. So I would only interact with Google when I needed information. You see what I mean? So Google's picture of me was very incomplete. versus like Meta when they came out with Facebook.
Yeah.
Right. We were putting our pictures. I look back and I laugh, right? Like how many times I used to write these absurd posts on Facebook. I don't know about you, but like, I'm like, what was I thinking? What was young me thinking? Like giving all my opinions to Meta.
Yeah. No,
So look, it was a function of one, my experience, understanding like, okay, how much information am I giving to these guys?
yeah.
Extrapolating that to what is needed to build an advertising business
Yes.
and borrowing from Google's model. And also the fact that Sheryl Sandberg came from Google, right? And she'd helped build Google's advertising business. So I knew she was going to borrow from that, but she just had a much better data trove, right? And even today, what's really funny on that point,
Yeah.
because I now have more information to validate,
Yes.
our best performing marketing platforms is Meta,
Yeah.
especially in a space like beauty, where understanding your client at a nuanced level is so critical. We have much more efficiency in executing our ads on Meta than we do on Google. And
Interesting.
it's just a function of the quality of information that Meta has. So that for me is fundamentally how I think about investing, right? So it's massive structural tailwind.
Mm-hmm.
I'll give NVIDIA as a good example, actually, because everyone thinks when they hear I'm an investor in NVIDIA, they think, oh, you came into the AI boom.
Yeah.
Rewind. I invested in Activision 7 years ago,
Really?
8 years ago.
Wow.
Part of the reason I invested in Activision and I invested in Tencent, Activision and Tencent were my two gaming investments.
I remember.
Was
Yeah.
you remember this, right?
Yeah.
I got fascinated about gaming because I went to Boston and a good friend of mine invited me to a gaming convention
Mm-hmm.
they were running a tournament. I have not seen so many people between watching online. It was like going to a Premier League game.
Wow.
And the winners were getting paid $2-3 million. I remember calling my mother and being like, why did you used to tell me I would never make money playing video games? Like, you were absolutely wrong. Like, what are you talking about?
Yeah.
And basically, after I saw this, I started looking at the stats of like e-gaming and the growth of e-gaming and the viewership of e-gaming. I mean, think about platforms like Twitch that Amazon has bought and all this, right? And so I started realizing that fundamentally, the Gen Z and the generation that's coming after us, live sports is falling down in terms of demand for them.
Yes.
And e-games is really where the puck is going in terms of replacing live sports, right? The Cristiano Ronaldos of our generation are going to be the e-gamers, right?
Yeah.
And so I started looking at that and started thinking about, okay, back to kind of who's going to be a category leader, right? So I started looking like, okay, now content in my mind was like how you win, right? So it's like, okay, who owns the content, right? And so hence Activision, if you look at China's gaming market, Tencent, right? So those are kind of like pick the big Western giant that's going to keep growing, pick the big Eastern giant that's going to keep growing. And from there, I started kind of taking a step back as I better understood Tencent. And I realized actually the biggest gem in Tencent is the technology wave that's happening.
Yes.
And Tencent owns about a 30% stake in Epic Games.
Yes.
And if you think about the fundamental technology that's enabling the advancements in gaming that we're seeing, particularly in graphic design of the games and like the real life quality, is a system being created by Epic Games, right? So I doubled down on my Tencent investment because of that ownership in Epic Games and that technology revolution that Epic Games was bringing because of the core platform they were creating that was now making games more real life.
Yes.
Right. And so you fast forward and start thinking about Epic Games software. What hardware do they need to be able to run that on? NVIDIA. So my thesis on NVIDIA was an extrapolation of looking at content players, looking at the software that these content players need to be able to deliver better quality content.
Yes.
Looking at what's the hardware that the software needs to run on, and then understanding that there was a monopoly in that hardware. So everywhere else in the value chain, there was high competition. Content studios, software, hardware was where you had a true monopoly. And NVIDIA was the only game in town.
Yes.
So that's why I invested in NVIDIA. And then, of course, I got to ride the whole AI wave.
You made some money, I'm sure you did, which is good. You know, when I look at how I invest, it's interesting. because it's a game. That's how most rich people do. They invest sometimes mostly in the public markets, and also even in private equity. And of course, they have the money to kind of like, risk, in these angel investments. So that's interesting. So now, do you want to share? I have a WhatsApp group where I usually kind of like talk with my, members there. One of the members was asking me, like, because most people think like real estate, for example, it's very risky. Are there any ways which you think like people can potentially invest, like, use debt to invest in, like, maybe even on consumer items or on productive assets, probably maybe in Kenya, Africa, or maybe globally. Are there any other ways that you think, potential investors can use or explore?
I mean, look, I think definitely I early on in my investing career,
Yeah.
I did not pay as much attention to real estate,
Mm.
if I'm being quite candid.
Yeah.
And I think it's just a function of um, high upfront capital, lower return. But I think what it does for you, it's more steady,
Yeah. Okay.
right? And I think there's two ways to invest in real estate. There's investing in real estate for capital appreciation, and
Yeah.
there's investing in real estate for income generation.
Yes.
And I think one thing that I have not appreciated as much in my investment portfolio is income generation.
Yeah.
And I think it was just a function of the fact that like I was in a phase in my life where my living expenses were low because I was single and you just didn't need that much like liquidity, right? So you could risk it all on
Yeah.
illiquid longer term investments,
Yes.
right? But I think I encourage everyone to kind of evaluate what are your liquidity needs. And I think it's always good to kind of build a balanced portfolio.
Yes.
And I think real estate for a long time has offered, I think a good term that your audience should pay attention to is there's a term in real estate called cap rates.
Mm.
And so what a cap rate looks at is it looks at your rental income as a percentage of your ownership price. So if you think about it this way, if I paid $100,000 for a building
Yes.
and I'm making $9,000 a year, my cap rate's basically 9%,
Yes.
right?
Hmm.
And so it's another way to look at return, right? But the beautiful thing about real estate is if you have pretty significant occupancy, and funny enough, I started appreciating real estate because I got into the Airbnb market. And so I'll give you a good example of what this looks like, particularly in the Kenyan context.
Yes.
There's a massive amount of underutilized apartment buildings, particularly luxury apartment buildings in Kenya.
Yes.
The challenge is there's a massive group of expats who come to Kenya for 6, 12, 18 months,
Yes.
and they're not looking for long-term leases, right?
Yes.
Because they come to East Africa to travel around. So they want to spend 3 months in Nairobi, 3 months in Kilifi, 3 months in Diani, 3 months in Dar, right? They want to hop around. So nobody wants a 12-month lease,
Yes.
right? And so they're looking for short-term rentals.
Yes.
What's interesting is that there's an arbitrage you can make between the developers and the landlords who
Yeah.
want a long-term client where you can sign a 12-month, 24-month lease,
I
right?
see.
Which is what I was doing. I'd sign a 24 to 36-month lease. And then I would then list my properties on Airbnb for short-term leasing, focus particularly on these expat clients who are coming in,
Interesting.
right? And to give you some context, right? You could rent one bedroom
Yes.
for 35,000 shillings, right? Which is like 290,
Yeah.
$280.
Wow.
And you could, if your occupancy was 70%, you
Yeah.
could make as high as 70,000 shillings, which is like 600 and something dollars
The man.
per month. You could basically make double your rental cost, right?
Yeah.
So, and if you own a couple of these properties, right, that's pretty good rental income per month.
Yes.
Right. And I actually know somebody who's built actually two people. One
Yes.
has built a business that pays him $1 million a year in rental income,
Yeah.
right? Just doing the strategy, and another that is now on $300,000 a year, same
Yeah.
exact strategy, right? In Kenya,
Yeah.
right? And so my point is there's a lot of room in a space like that. I just think you have to get creative, right? I think I think a lot of time people look at the real estate market as like, I want to buy and flip.
Yeah.
I don't think Africa is a buy and flip market, kind of like what happened in the US,
Yeah.
where everybody got into the US, the craze of buying and flipping homes. I
Yes.
think Africa is a be disciplined about getting good quality real estate in good locations,
Mm.
get into a long-term lease
Yes.
at an affordable price, and then play the short-term lease game, especially in markets like Nairobi that have high turnover of expats.
Yes.
You're always going to have a demand of people looking for good apartments.
That's very interesting. Okay, now as we move to the last segment, it's interesting that our conversation actually is taking longer than anticipated because we are talking about very exciting stuff. So
No worries.
now on the your career, like you have many hats and you are very accomplished in my view, and you have done so well. I'm super proud of you, my friend.
Thank
Um,
you. Thank you.
Yes. And do you wanna kind of like, summarize like the lessons, the main lessons that you have learned, transitioning from the US, to the continent, challenges and opportunities, so that probably some of my audience who may be interested might, learn from you.
Yeah. I'd say number one, um, the journey you're on, um, the path is never clear,
Yes.
right? I think if you spoke to me when I was at Goldman and you asked me fast forward 7 years,
Yeah.
where would I be? I don't think I would have described where I am now as the place that I'd be.
Yes.
Right. I think in fact I would have probably told you if I became an operator, I'd be back being an investor already full time.
Yeah.
Right. Either it's private equity shop, or in VC, right? More likely a private equity shop.
Yes.
Um, and so I think you have to trust the journey,
Yes.
right? And you have to be open to opportunity because you never know where it's going to lead. And I think for me, what's been a guiding principle in trusting the journey is just my faith, right? And being able to lean on God and be like, hey, am I going in the right direction?
Mhm.
Right? Because there are seasons that it doesn't make sense,
Yes.
right? When I went to Good Life,
Mhm.
right, it didn't make sense. Like I was the number two at Wasoko. Wasoko at the time when I was leaving Wasoko to join Good Life, Wasoko was 10 times the size of Good Life,
Wow.
right? So it's like the math didn't make sense,
Yeah.
right? But same thing with leaving $200,000 at Goldman to Jumi at 50,000, right?
Yeah.
If you're focused on the money, the math doesn't make sense.
Yeah.
So you need that faith, that guiding principle, and that adventure spirit,
Yes.
right? To be able to jump into these opportunities and truly give yourself the time to give it the best shot
Yes.
and comfortable that it may not all work out.
Yes.
But the good thing is that you've learned something.
Yes.
So I'd say that's number one. Because letting go of the fear of failure has been super critical for me.
Yes.
Even on this like journey, like you see people think, oh, because I've built businesses before and I've been very successful, it must be easy, right? Like, you've done this before. Baki must be like a steamroller. You're just
You know,
rolling through everything.
no, I'm gonna hit back the pushback on that. Um, some people may say, well, I am struggling to make ends meet like the basic. So for you, probably you don't have to worry about the basic living expenses. So then
Mhm.
you know, you have a high latitude to take up risky adventures, right? But someone might be saying, look, I don't even know where I'm gonna get my rent. But of course, I don't like people who give excuses, right? Because there's
Yeah.
always somewhere, somehow you have to start from somewhere and you have to
Mhm.
think how to get out of that situation, right? Because
Yep.
nobody owes you anything in this world, right?
Mhm.
That's my philosophy in a sense. Yeah.
Yeah. No, it's a fair point. It's a fair point. Look, I think at the end of the day, we have to look at our situation and see what makes sense within the constraints that I have.
Yes.
Right.
Yeah.
And I think to your point, right? I had a investment portfolio, I had savings from
Yeah.
my time at Goldman that gave me some security,
Yeah.
right? To be able to do that.
Yes.
And so definitely that is a calculation in my risk. But I think even beyond that, I think it's also a personality thing, right? Even if I was dead broke, would I probably still make the same decisions? Probably. But I'm also just that person, right? Who will take
I appreciate.
what to most people seems outsized risk,
Yes.
right? So I think it comes back to the adventure spirit, right? Like there's some people who just have that adventure spirit. I think you can cultivate it, but I think, as you said, you got to cultivate it in a way that makes sense for
Yes.
you, and especially if you have a family, your family.
Yes.
Yeah. And then number two, I think the second lesson I've learned is details matter.
Mm,
Right. I think when people ask me about my success, people think, I'm some genius or some guru or whatever. And I tell them, no, like I just spend time doing the work that no other CEO or COO wants to do. Like I spend time when I was at Wasoko. Our success was not because I had some crazy insight. I was just in the field all the time. I was always sitting down with our people who were going to the market, our salespeople, our drivers. And I was just back to my point about information. You
mm,
have to create ways of gathering and acquiring information. And the better quality that information, the better quality decisions you make,
mm,
right? So most of my day as an entrepreneur is structured around how am I getting information?
yeah.
One, from my team, from my competitors, from other founders, from investors. I'm constantly absorbing information and figuring out what's useful and what's not, right? And then applying what's useful into my decision-making frameworks, right? So details matter, right? And I think a lot of people, and this is the unfortunate part about the African continent, is when people think you're CEO, people think, oh, CEO means you just order people around and then you come back later and check that they've done the work, right? But it's no, that's not how I think about it. Like you got to be in the details, right?
Yeah.
And my team knows there's almost no job in every company I built that I'm not willing and able to do,
Mm,
right? Because I just think it's important to understand,
yes.
right?
Mm,
You could just be you're so much better, like even with tech, right? I'm not a computer scientist, but I have many tech friends. And
yes.
I always leverage their knowledge and their understanding to be like, what else could I be doing better here?
Yeah.
Right. And so over time I've become a much better tech leader,
Yes.
even though that's not my core. You
Yes.
see what I mean? So I think details matter is the other thing I've learned. And the last thing I think, which is just important, and I've talked about this all the time,
Mhm.
is, and it just comes back to my philosophy of life. The
Mhm.
long term matters.
Yeah.
Think long term,
Long term.
right? Yeah. I think the fact that with Wasoko, our vision with Daniel was always we want to build a 100-year company,
Mm.
right? It allows you to look through the noise of the day to day, the quarter to quarter.
Volatilities.
Right. I'm not saying these things are not important, especially if you're not a profitable business.
Yeah.
These things matter, right? Because it's all about survival.
Yes.
But do not lose sight of where you're going.
Yes.
Do not lose sight of the long-term picture.
Yes.
And where there are trade-offs where you could pick the long term
Yes.
versus the short term, always pick the long term,
I see.
right? And you may not see financial results today, but and I think even for ourselves as individuals, and thank you for making time to do this, because a lot of what you're doing with this podcast, right, is helping people think long term.
Yes.
Because fundamentally, the foundation of thinking long term is investing in oneself,
Yes.
right? And education is the best investment one can do for themselves, right? Whether it's listening to podcasts that
Yeah.
can feed you, whether it's reading books and
Yes.
things like that. Like I remember I was talking to my wife earlier today, and she was telling me, she was like, "When do you have time to read books in your busy schedule?" And I told her, I was like, the biggest learning I've had to make transitioning from when I was junior at Goldman to now is
Yes.
that part of my work is making time to read books. I
Yes.
used to think that was an absurd thing to say, right? Because we're so programmed to do.
Yes.
And we don't realize that part of growth is like making time to learn,
It's not development.
right? Exactly. So my Mondays are actually structured around my personal development,
I see.
right? So I take very few meetings on Monday and I focus a lot of my time on personal development.
Yes.
Right. And I realized it just makes me a better leader and it makes my company better and it makes my team better. Right. Because I can bring fresh ideas. Right. I can take a step back and reflect on something someone has told me and be like, actually, you're right. I'm
Yes.
absolutely wrong.
Yes.
Right. Because I've given myself time to reflect. So
Yes.
I'd say those are the lessons I've learned on my journey.
That's very fantastic. And then to just, conclude and also add something there is I have realized that, most of the learnings I have read, quite a lot of books on finance and stuff. And it's a way of actually, going through other people's, like experiences without necessarily meeting them. I remember reading this book that was recommended by our mutual friend, who's The Buy Side by this guy. I think you know him from Wall Street.
Yeah.
Like it gave me a visual, like a kind of like an idea of how things are. And even now when I'm trading, and I kind of like have this, intuition that I get from reading reports from Wall Street Journal and everything. And sometimes it's like the little details that you may overlook. Like, for example, if you don't look at the economic data when you are making a trade, and that data is dropped, and when you are in a position, it can you can potentially see from green to red in a second.
Yep.
So details,
Yep.
you know.
Yep. Details matter.
Yes, so I would like to also conclude by especially thanking you. I know you are very busy, and I really appreciate you for all the work that you are doing and all the support that you also have rendered me over the years. I really appreciate. And to the audience, I hope you really enjoy this podcast. And I will also put on the comments, like links to Kwenui's, organization and the work that he is doing, so that probably you find it interesting to look at the products that they have, because I can count that he is a very good and honest man. So probably you will like his products as well and the work that he has done over the past. And I hope probably to see you when probably we'll visit Kenya. And if you by any chance, come to Vancouver, to see you soon. Thank you so much.
Thank you, Isaac. And yes, definitely. I think you'll probably beat me in Kenya first before becoming to Vancouver. But yes, no, thank you so much, and thank you for reaching out and making the time for this. This has been great.
Thank you so much for tuning into this podcast. I started this podcast with the goal to share insights on personal finance, investing, and career insights. But did you know that out of all the people who tune in on this podcast, and by the way, I appreciate you, all of you, only 10% are subscribed. So if you are one of those people who are not subscribed, I highly encourage you to subscribe, so that when I post content in the future, you get notification, and also this podcast can grow. In return, I will bring in guests from different parts of the world who are successful in their own rights. The goal is to share their personal experiences on personal finance, investing, and also career insights. That way we can also learn from each other through our conversations. I hope you enjoy yet another podcast at Streetwise Economics. Have a wonderful time, and may the markets be with you. Thank you again, dear viewer.